Good afternoon, and welcome to today's edition of the Smart Investing Daily Briefing. I'm Brent Wilsey, with me is Chase Wilsey, and we are from Wilsey Asset Management. Well, today we're talking about the Roth IRA versus traditional IRA, and also can be in the 401ks as well. Well, first of all, let's talk about really the differences of the two. Well, the Roth, you put the money in, you get no tax deduction, but when you take it out, you can take out the money tax-free. As opposed to a traditional IRA, when you put the money in, you get a tax deduction for that. When it comes out later on, you pay taxes on that money. Now, the thing that I ask people, because many times you're doing these for 20, 30, maybe even 40 years, do you trust the government when it comes to the tax-free side? Because on the tax-free side, they're saying, yes, we're going to give it to you tax-free, but do you trust the government 40 years from now? They're going to say, it's still tax-free, or will they trick you saying, you've done so well investing, we're going to tax you because you're in a higher bracket.
It's important to do your homework here because Social Security is a big thing that was supposed to be tax-free, but now it's not. So
Correct.
Again, understand, do you trust the government? Also, kind of talk about which account should you have. It really depends on your situation. There's a lot of differences that may affect your personal situation, but always important, I talk about this in this week's newsletter, is you have to understand your situation plus the financial impact. Draw out the numbers and let the numbers speak for themselves. And one thing people tend to forget about is compounding when it comes to these accounts. I'd rather take a tax deduction now and let that tax deduction compound over 30, 40 years versus get no tax deduction and not have that compound.
Right. And you're talking about the deduction you get for that money, because that's money you get to keep, invest that, and compound that as well. So this is why it's so important to read this newsletter, because we can't talk about it here in 2 minutes, but you got to read the newsletter and get it at smartinvesting2000.com for more details on Roth or traditional. Very important, because people just go with one because of, oh, it's tax-free. Look at the numbers as always. Speaking of looking at the numbers, let's look at it coming today. Whole Foods market right now on $32.81. High for the year, $41.75. The low, $28.07. You see a big spike here. Way down right now, again, around $30 a share. Let's look at the numbers here on Whole Foods. Now, I'm going to point out, October 2013, it hit $63.13. Today, it's under 33. That's almost 3 years ago. This was a hype stock back at that time frame. It's trading around 40, 50 times earnings. And if you're hearing the story again, people that bought it back then saying, oh, it's going to go to 100. Doesn't happen. Everything goes back to the mean. I don't think you'll see this stock back to 63 for a long time to come. Looking at the fundamentals of the company, we do see sales are up 4.3%. Earnings, however, fell by 10.3%. And look at the industry, up 13.3% on their earnings.
That's very interesting. I like Whole Foods. I think they're a great company, but again, just kind of overpriced for a long time. Balance sheet looks very strong, speaks to the strength of the company. As you can see, current ratio 1.6, debt to equity only 32%, no concerns there. Net profit margin 5.3% versus the industry average of 2.6%. Not really surprised to see that because they are kind of a luxury retailer, I'll call them, in the food industry. Going out to September 2017, as you can see, estimated earnings per share, $1.59, gives a target sell price of $26.24. To give you an idea of where we'd buy this company, we'd actually buy it under 20 to get our margin of safety of 30%. So still does not appear to be a buy.
Yep, be patient. Well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like to receive a free report on the 5 big mistakes investors make,
you can give us a call here at the office at 858-546-4306. And if you missed any previous Smart Investing Daily Briefings, go to our website, smartinvesting2000.com.